Good morning, traders. Happy hump day. It's Wednesday, the 14th of October, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. I'll run through the news quickly, quite a bit that came through last night. JP Morgan reported after the pit close came in at $1.32 adjusted versus $1.38. Revenues were lower also, 23.5 billion versus 23.8 billion. The stock is down 0.28%. Intel also reported came in at 64 versus 59 expected. 14.5 billion in revenue versus 14.2. Intel is also down. Gross margins are lower and it has cut its fiscal year 15 capex to 7.3 billion from 7.7 billion. Last night, Reserve Bank of New Zealand's Wheeler said that further easing seems likely. This sent the New Zealand dollar dropping. Chinese stocks fall for the second day in Hong Kong on inflation concerns. Market fearing deflationary trajectory in what is now the world's second biggest economy. Otherwise, mostly quiet. MBA mortgage applications came out today for week ending October 9th. Came in at negative 27.6% versus expected 20 or versus prior 25.5%. That's more than a 50% swing lower. And so overall, and that's really the result of changes in mortgage applications here in the U.S. that took effect in October. September advanced retail sales came in at 0.1 lower than the 0.2% expected. X autos negative 0.3% versus a negative 0.1%. PPI final also came out a half hour ago, negative 0.5 versus negative 0.2. With year on year coming in at negative 1.1 versus negative 0.8. And then finally, the Bank of America, BAC, reported Q3 37 cents versus 34 cents, 20.7 billion in revenue in line. What's left for today? Today we have business inventories. Business inventories in the U.S. at 9 o'clock Central, 10 Eastern, expecting 0.1%. And looking at the calendar, the only other thing we have, we have Fed's Juncker speaking now in Parliament in Brussels. But the other thing we have is Fed's Beige Book at 1 o'clock Central, 2 Eastern. Tomorrow, again, we have CPI, Philly Fed, ECB and Fed speakers. And on Friday, we have European CPI and trade balance, U.S. industrial production, and University of Michigan, and ECB's JASBEC. That's Friday. Let's switch gears now and look at the what the market has done. So overall, an interesting day yesterday. Our primary hypothesis was that it would open out of range. It would open out of range, and it did down here. And the idea was for responsive buying. If you recall, if you watched the Trader Bite yesterday, responsive buying up till 2007, which is right here, was looking for it to go to 2000 as far as 2007, and then to see some resistance, and then to walk itself down and towards the VPOC below at 1980. Initially the areas I outlined were 1982, 1989.50. Those were the targets. So we're looking for it to go up and then walk itself down, break lower, retest, break down to 89 and a quarter. And then the extended target was the point of control, naked point of control left behind from last Thursday, which was at 82.50. Right down here. That was the primary hypothesis. Now, what it did was to actually get the responsive buying, but it got responsive buying and responsive buying and responsive buying all the way through and into the gap zone above. So we breached that double top stat that we were looking at. We had a double top stat from a couple days ago. Right over here, we said that this is a double top at 2012 quarter. Looking for, that's a double top is essentially a week high, and the market does not generally retests weak highs or breaks them. We look for a breach of a weak high, and so there's a statistic here on double IB high which says that this is an old statistic, so just be careful here. 82% of the double IB highs are broken within the session, and it did not work out. We ended up with a session that had a double IB high, and it had a very short-term double IB low. Double IB low has an 83 to 84% probability of being broken during that session. So when I spot a double IB high, double IB low, I'm looking for a pullback to trade towards that. Again, past performance is not indicative of future results. Statistics, being as they are, still hold a 50-50 probability on the very next trade. So just because I'm saying 82, 83%, you should bet the house and use maximum leverage for these trades. It doesn't work that way. Okay, you could get yourself in a lot of trouble. So what it did is it broke that double IB high stat up here and pushed right into the gap zone that I outlined yesterday, and I have it highlighted. The gap zone from the 21st, right in here, it pushed right almost to the other side of the gap zone, and it failed. This created the fact that it pushed right through the entire microcomposite zone made up of Friday and Monday, Monday being a very light trading day because of the bank holiday. The fact that we pushed right through without two-way trading through this balance zone created an opportunity for me on the short side up here, and I took the trade. I demonstrated the trade live or in real time in the S5 chat room. Back to 2007. So that trade was an entry at 13 quarter, 14 quarter, which is 2 ticks from the high. It's not intended to call out the high. That's not the business we're in. And then so scale in 2 times. I had up to 3 times to scale in into the 2015 area, and then we're looking for it to break down and get back to 2007 with the exit at 2007.50. Left a lot on the table, but that's okay. That wasn't my trade. My trade was the 14 back to 7, and that worked out. Not all trades work out. I often post losses, but it did push through. And once it broke through the mid here, you could see there's quite a bit of volume that hit the bid. It just there was a lot of liquidity at 2007 that the market worked through, and once it got past that liquidity, you had a lot of people getting flushed out, or a lot of contracts, long contracts getting flushed out, and we saw this big drop occur on pretty big volume, and then from there it just chopped its way through Monday's low and then broke lower. It did what was originally the idea of Hypo 1. And Hypo 1 again was to push to 92, 89 half. 89 half is right there, right here. You see this LVN right here. That's 89 half. That's the key LVN before we get into the balance zone from last Thursday. So now, and notice that the overnight session low is 89 and a quarter. That's not a surprise. It just pushed through the LVN by a tick. The expectation going forward, let's color it in with the overnight session. So here we are. We had a really interesting looking profile yesterday, some multiple distributions, but most importantly, we shifted the point of control down to the low end of the range below the 2-day point of control. So if you look at The 2-day point of control is up at 2007. So here's Friday day session. Here's Monday day session. And combined, they make 2007. You could see that Monday was inside of Friday, completely balanced day on Monday, an inside day. And now we shift this point of control below. This is a shot, a warning shot for all buyers that value has come down. This is this day actually tested above and below the 2-day balance and finished below, with the most valuable price being below. This is quite bearish, and that's the stance that I take on Hypo 1. So with a weak low, point of control near the low, what do we expect? We've seen this over and over and over. What do we expect? We expect lower overnight. We got that. Pushed to 89.25 from 93.25. The market has come back and retested yesterday's opening low and has failed to hold on the retail and PPI numbers. We had a nice big drop there, 5 points, and the overall stance of the overnight session is it's balanced around yesterday's close. Here's yesterday's close. Here's the point of control, and it's sitting right at that close. So what we're looking at here is a compression on the overnight session. So today, the primary hypo, or the area or the stance which I take on the biggest trade of the day, is going to be to look for an OAOR, an open auction out of range, to look for it to come back and retest. I'm looking for a test up till this LVN, this key LVN at 98.50, which is the overnight high. The overnight high tested the low volume node from yesterday, the key low volume node. So you can see the profiles is made up of one low volume node and then a high volume node, and it's very distinct in its character. And what it did overnight is it pushed up to that low volume node, and I'm looking for a push towards that low volume node. But overall, I expect it to break lower and test this 82.50. As long as we stay below 89.50, this LVN back here, then our target, our natural target, is going to likely be 82.50. And that's a primary hypothesis. The primary hypothesis, however, is not exclusive. It doesn't have a very high probability, or an exclusive probability. If we do test lower and we fail to hold below 89.50, then we're looking for 98.50 to be taken. I'm looking for the overnight stat to be taken on the high and the low. And then what we will likely do is target the next HVN, which is the 2,350, 2004 area above. That would be Hypo 2. Okay, I'm out of time, but I want to show you real quick what's happening in the underlying cash market. So here's the SPX chart. 52-week highs are in green, 52-week lows are in red, and you could see that the 52-week lows making new highs are making the number of 52-week lows that are registering are very low. They're sitting at a very low level, and the 52-week highs have gained a little bit since the last couple of weeks, but I'm looking for this to start picking up, and then this to flatten out even more. The put-call ratio is neutral, and overall, the 5 key sectors of the S&P 500, that's the consumer discretionary, technology, healthcare, financials, and industrials, are all sitting sideways right now. I'm anticipating that these will turn and point lower. So that's the overall underlying market. The SPX had a decent recovery, but it has not taken out that high like the futures market did. It just hovered up against it, and it's starting to roll over. And I expect it would work its way down to the 1970s over the next week or so. That's how things are shaping up. I'll leave you with that. I'll hopefully you're gaining something from this, and you're starting to wrap your head around a plan before you start trading. And then once the market opens, just look for higher probability or higher risk reward um, setups. Take those and let the market tell you what it wants to do. Don't interfere with your trades. Just plan the trade and then just let it go as opposed to micromanaging it. It all comes down to execution when it comes to what we do, and having a strong idea or bias formed on a strong foundation of auction, how the auction is going, and strong areas of support resistance is the way to hold on to a trade, not let your psychology get in the way. Good luck today. I'll catch you tomorrow. Take care.